looking at that chart, overdone, overrun, but you want to be short the trade-weighted yuan, but you say here very clearly it's not really tied to trade wars or trade angst. Run us through your thinking.
Yeah, I think there's two things going on. I mean, firstly, if you look at the real effective exchange rate in China, it's close to the 95th percentile of the last 25, 30 years. So you've got an expensive currency, and you also have a central bank that is going to opportunistically continue to ease policy. So, net in what should be weak dollar environment in 2020, we should see the yuan underperform. So it's yuan underperforming the basket as opposed to dollar yuan doing much of anything, really.
Yeah, and it's that combination of targeted stimulus from the authorities as well as the easing in US-China trade tensions that means you expect some upward momentum, modest upward momentum in the Chinese economy in 2020. What exactly does that mean? What would it look like?
Yeah, so if you look at China's credit impulse, for instance, it's been going up for the last year or so, and that continues to point to stabilization in the economy. The easing policy, again, is going to look very similar to what we've had in the last couple of years. A little bit of rate cut, a little bit of fiscal policy, nothing quite as big as what we had in the last 2 or 3 credit cycles. But net, China becomes a little bit less of a story this year, and that's probably a good thing for financial markets.
Translate that into the rest of the emerging markets, because if I have a short position on the trade-weighted yuan, if they go for a little bit more stimulus, as you say, easier policy, what does that mean for EM?
I think EM is in a sweet spot. So a couple things going on. Firstly, we've talked about EM for a long time being fundamentally cheap, and that's still the case despite the fact that we've had a small rally in 2019. But now you've got a macro narrative that's turned. The business cycle is turning. The Federal Reserve is telling you that almost no matter what, they're not going to hike rates. So suddenly EM looks like a cheap play in a low volatility market with the macro narrative turning much more positive.
Yeah, and within that emerging market space, is it emerging market Asia that you're particularly positive on then, if it's China that's sort of driving the story for you?
Yeah, I think it's a general story, but I would say last year we weren't very positive on Asia in general. But now, because the U.S.-China trade relations have eased, because the global manufacturing cycle is turning, we're telling people you should take a look at Asia. Korean won is for instance, one of the currencies that we really like this year.